Hello, Mark Sturdy here with another summary of our work this week, 7 days ahead. And if we look at the summary sheet, you'll see that we remain excited by the weakness of the yen against the dollar. We are excited by Euro Stoxx 50, and we are not looking at anything in the bonds, but we're excited by the bare possibilities of gold. Let's start very quickly with the dollar euro, which has run into a certain amount of lack of clarity in terms of we're still in this trading range. We're testing the supports, if not 114.73, then down beneath at 112 or so. The dollar has been strengthening. No question. That trend from early April has continued, but we still think there's tremendous resistance to much further strengthening, and we expect dollar weakness to continue or to begin, and euro strength to happen. But it's not right there now, no question about it. Dollar sterling, though, we think is interesting, as is sterling euro. We're sitting right on this support here. A break of this rising wedge would suggest lower levels for sterling against the dollar. Worth keeping an eye on. You'll see that this is the critical level, 131.44 in the weekly chart, 131.56 in the day chart. Watch that closely. Look also at sterling euro, which is right up against these critical prior highs, 116.11, 116.12. A break of that would send it higher still, which is a strengthening of sterling against the euro. Watch for the strengthening of sterling then in both cases. Dollar yen we think is exciting. We've long held this triangle here at this prior high, has completed, driving the yen lower, the dollar stronger, and we've had this short-term breakout through 160.83, 160.27 in the day chart. So the yen is freshly weakening. Sterling is on the cusp of getting stronger against both the dollar and the euro. Stocks, we are excited by the Euro Stoxx 50. It is this is the weekly chart driving up against the prior high. This is the pause, and yet in new territory. We were very excited by that. Slightly less excited, but nonetheless, all these markets are bullish. The only difference is that some are more going sideways more obviously than others. This seems to me to be building up to a continuation triangle. Wait and see, of course. The Nikkei 2 has been going sideways, or supported by 68.860. Nonetheless, for that, it's still in a good rallying mode. FTSE, well, perhaps a little more anxious. That's no longer a continuation triangle, it seems to me. It looks to me as if it's continuing, not looking like it wants to break up for the moment. Bonds, well, they're complex, and there's a lack of clarity is the big answer. Here's the trading range of the new Treasury notes. Here's the unbroken, uncompleted possible bear triangle in the US Treasury notes. Complex, maybe short-term bullishness price-wise in the US. German bonds fallen back beneath, were pushing for higher rates, now it's fallen back. Not at all clear, this might go higher. Stand clear of these bonds. The gilt slightly is even less clear than the others, insofar as the potential for lower levels has been tested by this yield falling back, but it's not compelling. Stand back from the bonds is my view. Oil had the move that we talked about from this head and shoulders top, drove down to 70, which as you can see is a long-standing support level, so that we may not get a lot of more action here. But the gold we think has further to go. It completed this head and shoulders top, it broke lower and can go a lot lower still. We think the potential there is down to 3,000 or so. Thanks very much.